Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. And I'm your host, Kevin Horner. I'm joining you from a very fall looking and feeling Denver, Colorado today. As is often the case on a Wednesday, I'm joined by my friend and fellow coach, Brent Morris. Good morning, Brent. How you doing?
Hey, I'm doing good. I'm glad you're back from your little hiatus there, Kevin. I think everybody's glad you're back, and it's good to see you. You're in one piece, and good to hear your insights from the market.
Well, I'm glad to be back. Of course, 10 days off from the grind, from the market, an opportunity to recharge the batteries. It was fantastic. I am absolutely ready to get down to business, although I have to admit, I'm a little off my game. You know, we start when you watch the market every single day, and then you take a week and a half off from watching the market. You feel like you've stepped back in time a little bit. So I'm going to be getting my feet under me here, back to some basics. But nonetheless, we'll review what we've seen. We'll check out some levels in the broader indices as usual, and we'll dive into things for all of you. So we heard from Netflix late yesterday. We got a big move there. We'll talk about that. Take a minute and say hi to Barb Armstrong there in the chat. Don't forget you can follow the three of us on X, Kevin Horner CS, Brent Moore CS, and Barb Armstrong CS. The best way to engage with your coaches aside of the classes we offer you here on the channel. So make sure to follow us there, everybody. All right, let's get to our disclosures, and then we'll dive right in. So please remember that our conversation here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for a specific approach to trading the market. We do talk technical analysis here, of course. Remember that technical analysis is just one piece of your decision-making puzzle. We discourage you from basing your decisions on all your trades exclusively from technical analysis. Now, as far as our agenda, it's going to follow the same pattern, everybody. We'll hit those broad indices, S&P 500, NASDAQ 100, Russell 2000, and work our way through some of the sectors on the move today, try to gain a little bit of understanding of how money's moving and what we can understand from that might help to peak where new opportunities could reside, of course. So, as always, watching the broader markets, drilling down into these areas on the move, and then the sectors and individual stocks on the move thereafter. So let's get to it, Brent. The one thing that I noticed in kind of jumping back to things here this morning was the move back in the S&P 500. So when I left, it was basically on the heels of the Friday China trade tariff situation, right? And we had this huge, ugly red candle. There's a lot of consternation at that point, Brent. We made a new low in the short run there on the RSI, but we've managed to bounce back. So should traders be feeling better about that bounce back, or are we maybe a little dubious about that bounce back?
Well, the market tells a story, I guess, Kevin, because the market has bounced back. And yeah, I mean, we've seen this before, to be honest, with trade tensions. There's a concern that comes out with trade, and then it just we're kind of used to it at this point. It's like old hat. And wouldn't say there's been a lot of progress, it seems like, on the China trade front. There's some talk, but there's maybe a de-escalation a little bit on the verbal front of that. And the market has just said, hey, look, we've seen this before. It seems, at least, this is my impression. And so it's been able to bounce back. Now, maybe there is something different, although we can see the numbers different. And it's something, actually, I know you saw in before our session today, that RSI didn't quite bounce back quite as much, did it there, Kevin?
No. It really didn't. That stands out, doesn't it? I mean, not just a lower low or lower high here, the lower low down here, but this bounce back creating a downtrend in the RSI as we bounce into recent highs. Can it be instructive to maybe think of it as maybe a legitimate view of a pause happening here at this upper level?
Well, it certainly can be perceived as some weakness. I think we never want to mistake the RSI for the index itself. And truly, the index is king, price is king here. And the market has almost bounced back to where it was. The trend is still up. I wouldn't call the trend broken. We're above that 20-day moving average. We're above that 50-day moving average, and of course the 200-day moving average. But maybe that is showing some more subtle signs of weakness. Now, look, we're in day 22, so some things never change, Kevin. You laughed. The market was in a trend up. There was a government shutdown. There's, so we're still if there's some progress there, that maybe could help. If there's no progress there, that may tend to hinder the upward potential for it. If there's no progress on the trade front, maybe it hinders the upward potential for it. We have some inflation data coming out on Friday that, depending on what happens with that could potentially hinder the upward progress for it. But it's certainly not strikingly bearish by any means. I want to say that.
Yeah. Well, I think that's a healthy reminder, Brent, because again, we talk in this class so much, or in this particular session, talk technical analysis, trend, understanding the trend. When does the trend change? When does the trend shift? And maybe some processes traders incorporate to manage their emotions along the way, regardless of how that trend might be looking. It's true that 50-day moving average continues to provide support. For a lot of traders, it's going to remain consistent until we trade under it. You'll notice we have not. That pullback we got on that China headline and tariff headline came right to the 50-day. We bounced off of it. So without any real shift in trend, without a close, at least a close below the 50-day moving average, which we have not seen since, I believe, May 1. Is that right? Let me double check that day. Yep, May 1. Haven't been under the 50-day, everybody. So you can lean into that from a standpoint of understanding at least a trend consistent within that window of time. So for a lot of traders, that's what they're going to monitor, what they're going to keep an eye on. Now, the thing that I find interesting, Brent, we had that rhetoric, and that's what it was, right? The conversation around China. Nothing changed or much in the last week and a half since, but because there was no more discussion about it, or the rhetoric was toned down a little bit, the market has seemingly bounced. Good. I can also say, though, Brent, it was maybe just the catalyst that brought the retreat to the 50-day moving average. The market, if I recall, the way I think about it, we recall being maybe a little bit uncomfortable at that upper level where we had just risen and continued to ride the 20-day moving average. Well, it felt to me like the catalyst of that trade rhetoric just led to some profit taking. And the fact that we bounced back and are really relatively close to the highs we just created, I think speaks to that a little bit. Now, doesn't mean we're not going to get a full breakdown from here, Brent, but I think it bears noting because inevitably we traders tend to take what just happened as the most important factor, and that's not always the case, Brent.
Yes, and I mean, just to maybe reiterate a point, we've seen this before. We've seen rhetoric regarding trade or concerns regarding trade. And I think initially, especially with the newer administration, the market initially reacted more significantly with tariff talk, trade talk. You can see that reflected at the beginning of 2025 through April. And then at a certain point, the market's just kind of like, well, we're kind of used to this by now, and it's reacting less strongly now. And so, that's what we're at, and nothing substantively has changed, I think, in the last week or so. And so the market's just kind of, old hat. Let's move on with it.
I think that's right, Brent. Talk to me a little bit about this move we've seen. Same thing in the NASDAQ, right? 50-day test. My lines are a measured move calculation from the range we broke out of. So we could say that the measured move in this scenario was achieved by the push into that those all-time highs. But again, at this point, it's not confirming for a lot of traders that this price action at this upper level is ready to break to the upside on the NASDAQ 100. Is that how you read this?
Yeah, I mean that's that all-time high creates a potential a key level, I guess. But hey, look, if you're a trend trader, the trend is still going up, and so yeah, I mean we've seen that high, but you can go back a little bit. I don't know the exact time. 3 weeks ago, we had an all-time high. That was a questionable move there. We can go back to early August, all-time high at that point. Eventually, we broke through, and so on. I won't repeat myself on that, but so would it surprise me in another month if we look back and say, well, this just kind of looks a lot like it did back in August? Wouldn't surprise me at all if that happened. The case. I don't know what's going to happen from here. And keep in mind, in addition, I mentioned government shutdown, CPI. We have earnings. And earnings season, we're at the beginning of earnings season still, and that can certainly affect the course of the markets.
Yeah, that's entirely true. We need to remind ourselves there's always an opportunity for a market move tied to some of these earnings reports, which we will, like I said, get to here momentarily, and some stocks in the news. We're definitely going to peek in on Netflix there. So if nothing else, Brent, I think the reminder that I'm brought back to is once more, monitoring trend is important. Leaning into price as king, also important. Nothing perhaps, though, more important than our process for managing our emotional tie to our own trades and maybe making some decisions along the way that'll make that process a little easier on us. And you all know what I'm talking about, right? Taking profits when given the chance, reducing position size when you're feeling uncomfortable, steps that can make you more comfortable in staying invested in the positions you want to stay with. Management's so important. If you're struggling to stick with positions as you watch trend and try to maintain trend, well, you might find that position size management, position size reduction can be part of that process and give you the emotional buoyancy you're looking for, perhaps. So something to just bear in mind, everybody. There's always a way to stay invested if that's what you're ultimately trying to do, but you're feeling maybe a little uncomfortable. So be thoughtful about that. Okay, Brent, I've just put up the Russell here. The Russell seems to have kind of gone a little bit sideways. Now, again, volatility of late, lower highs along the RSI as we're trying to digest recent headlines and risk factors here. I have not seen the 10-year yield. So while I've got the Russell up here and this volatility seems pretty notable over the last couple of weeks, the 10-year seems to be falling further. So where, we had talked about the potential for the 10-year to take out the downtrend line coincident with the 50-day moving average, boy, that acted as a rejection. This lowering of the yields is not a negative for Russell. That much I can state at this point. So what are you watching here on the Russell yields, et cetera?
Well, I think when the when the yield was kind of retracing up, one thing we said was, hey, don't worry so much about the micro movements. Look at the overall trend. And the overall trend has continued down. So would it surprise me if we see a short-term bounce back in yields back over the 4% level? It wouldn't surprise me at all. But the general trend has been, I would say, positive for the markets as a whole. We've said before, remember, it's probably beneficial for many aspects of the economy, including the Russell 2000, if the interest rates lower. But we don't want interest rates to lower because we're in a massive recession. That's the bad reason interest rates can lower. We want them to kind of gradually come down as fears of inflation lower. And, we are seeing maybe a little softening of the economy, but nothing too drastic. Well, there we go. That's what we're seeing there. And so, that's the overall course of the TNX. And that's certainly helping those small caps right now. And small caps are kind of having their moment because, hey, look, small caps have underperformed for over the past 5 years, more or less, I would say
Mhm.
small caps have underperformed the large cap indices there. And um, but right now they're actually outperforming a little bit.
A little bit, and inevitably we have to look at the long range chart on this, Brent, because the detail you've seen over the last 2-3 weeks is this volatility elevates at resistance. Essentially, we're trying to provide, or it's clear to me that the index is trying to give you the validation of a breakout. It hasn't gotten it just yet. Notice how you've got that huge tail last week. So we had a great move to start, and then things settled back. And yes, we're above it now, but you're looking for some semblance of confirmation. So whatever it is that allows you to define that for yourself, give consideration to that. Always helpful to pull back the curtain a little bit, look at that longer range of time on these charts as well. I saw a question here about CPI. Carol, that's looking like it's going to be Friday morning, if I'm not mistaken, Brent.
Yeah,
Thought we could
that's
just
my understanding.
yeah, let's just check the calendar real fast. So yeah, CPI first thing on Friday morning, although retail sales number tomorrow should be a little bit intriguing for us, as is new home sales. New home sales in particular, kind of a pretty decent harbinger from a lot of a longer range economist viewpoint about the health of the overall economy. So that's going to be something to watch. The last thing we'll get to here on the broad indices, we'll check on the semiconductors. Let me pull off my Fibonacci detail here. Let's see what's going on. This looks like semis holding on to the 20-day, Brent. The 50-day is way below here. Boy, we exploded to the upside, taking out this green line. I think that green line was basically at all-time highs, setting up what appeared to be a bit of a cup and handle in here over the longer range, and it just exploded when it broke that top of the cup, didn't it?
Yeah, that's a 5-year chart. So
Mhm.
yeah, we've moved up significantly in that time frame. Wouldn't surprise me to see a little bit of a breather here after such a strong move, but it all is going to come down. Again, earnings is going to have an effect on that. Maybe not a great start with Texas Instruments there last night, I think.
Mhm.
But that'll certainly affect things. You can see the long range RSI there at the bottom. We're kind of in that kind of I hate to use the term overbought area, even though it doesn't really necessarily mean it's going to sell off or anything, but it's certainly a level that shows how strong we've been here in the long term.
Yeah, it's been a good move. Many traders would suggest that this is a confirmatory in nature, and we'll just remind our traders here: we don't, as when you look at RSI and whether any oscillator of your choosing, overbought, oversold conditions. Remember, they can persist longer than you expect. The
Yes.
overbought does not imply a need to sell down. Oversold does not imply a need to bounce. So just be aware. Always keep that in mind. Brent, a couple of the key developments that I did note coming back to the office essentially was a big drawdown in miners and in gold and in silver, and I thought it might be helpful to just check on these because inevitably, we talked a lot in the last few months about how we follow trend and traders will stick with the trend as long as it maintains. Well, Brent, we might have broken one of those trends, but maybe not the most intermediate term. But notice the break here under the 20-day. I think we finally got a close below the 20-day yesterday, the first one in quite a while. And is this the move that gold was needing to continue the trend, or is this the kind of the heads up that maybe all of that fear that had been built into the market leading to this rally in both gold and silver, maybe that's perhaps, at least in the short term, run its course?
So this is interesting. We've had a strong pullback in gold and silver as well, but I was just noting over the last couple of weeks, a lot of, we'll say, prominent investors starting to say, wow, do we have a gold bubble? Is gold way too high? Is it due for a crash? And because it had just outperformed so strongly for quite a while here now. So a pullback, not surprising. The speed of the pullback, probably not surprising given that when something gets kind of perceived to be overbought, you start to see a pullback. Now, gold, a lot of times, we consider it kind of a move of safety. Well, look, there was a concern over trade, and that kind of probably helped to propel gold. Well, again, we've seen like some of the concerns coming out of the market. Maybe people are feeling more comfortable. It starts to fall, and then it kind of dominoes in a sense, and that more people go, well, we're going to take some profits here at this point. A lot of people have made a lot of money on gold recently, so a little profit taking probably is not a huge surprise here at this point.
Yeah, I think that makes some sense. A brief pullback, it looks about a little less than 10%, about 10% to the lows from the peak, in just about 4,400 down to about 4,000. So in that vicinity, and then noticing something similar in silver. This is a broad move, not specific to gold, not specific to silver. And then I'll also point out, if we take a look at the U.S. mining index, you'll see that the entirety of the space pulling back here as well. So big rally. Okay, breather perhaps, likely to be more likely than not profit taking, but along the way, that's a significant drawdown here. We're finally seeing that group, to the low. That was a good pullback, 17% over only 7 sessions, everybody. So, that's the kind of thing you will see when you've had an exponential move.
Yeah.
This has been fantastic for the space, Brian.
Yeah, you need to take it in context. It's one thing if a stock or index or whatever you're talking about has been kind of just going along ho-hum and they pull back. Yeah. There may be other reasons for it, but when something that has been flying high takes the pullback, then I think the first thing that comes to mind is kind of profit taking in that front.
I think so. It's never. What I'm happy about, Brent, more than anything, I guess, is to see that some of these charts are taking their breathers, because it's so difficult for a trader who's watching these patterns develop, following a short-term trend like the 20-day moving average, and hearing Kevin say things like, we got to be aware that these trends won't always continue. There will be a break. You'll have an opportunity for profit taking. You might even have a chance to re-add at much lower levels. It's nice to see some of that play out eventually, right? Because if I keep telling people, hey, you got to recognize these trends won't last in perpetuity, it's nice to see that's finally happening in some of these spaces. So, Brent, I wanted to give you the opportunity. Tell me, since obviously you've been very attentive to the market in the last week and a half versus me, from a sector standpoint, what's been standing out to you there amongst the 11 in terms of leadership or laggards? Take your pick.
Well, let's continue. Well, I mean, it's part of it's the same old story in that let's look at utilities. How about here, Kevin? Because utilities has a reputation that it has traditionally been kind of maybe more of a boring sector. Is maybe, I don't know. I don't want to be too harsh on it or anything like that. But for a while, it was just gangbusters, outperforming the whole market. And just kind of like gold in a sense, it has had a pullback here. It's eased down a little bit. Now, that's maybe in relationship to the rest of the market, but it's been kind of a weird one, because a lot of times utilities has been a little bit more of a defensive type sector. Well, the market's been, we had the pullback in the market, but the market's been relatively strong over the past couple months, and utilities has been leading the way. Well, we had that pullback. We're now below that 20-day moving average. Doesn't mean it's going to continue down here on that front. But now part of that may be utilities benefiting from interest rates continuing to lower down. But the last week, we're actually having that pullback in utilities finally.
Yeah, I think this, if I was going to speculate, and I try not to speculate too much as it goes here in the class, but Brent, I think You may have seen the explosive move that took us to new highs when we broke through here at around 445 on this sector index. I think this is more tied to the AI power generation necessities, and maybe we've seen a little bit more enthusiasm there than is generally warranted for the space. Now that doesn't mean anything, right? Other than to say that, hey, maybe we're falling just back to an area of short run support. Hence my question mark up there, Brent, about whether we could hold support here just below the 20-day. You know, the break and close below the 20 though, probably giving some traders a little bit of a pause.
Yeah, so we'll see. But right now, the momentum is down. You can see that reflected in the RSI point, heading down pretty significantly. And so until we see some evidence of a bounce, I'm not putting, that much weight in that support level until we see that.
Well, I'm going to do one thing there for you. Let's just put up the Fibonacci level. You'll see that we are kind of in between a series of them. 23% retracement from the move we made just in September is right above us, and then the 38% right below us. That might be an area for potential. But we as always, we got to see. Somebody was, let's see here, it was asking about, Jay, asking about the pullback. Could it be a bull flag? Yeah, it sure could. But as we often remind ourselves, in order for the bull flag to be setting up, the first thing we need to do is we need to stop the selling, right? So we have to see the selling run its course, Brent.
Yeah, that's why on bull flags or most other price patterns, you wait for confirmation before the trade. Now, that's not a trade recommendation or anything like that, but that's just a general approach that technicians use. Is you may see the pattern, it may look like a great pattern, but until it comes to fruition, until we get that break of resistance or support or whatever, or until you see it bounce, then you're in standby mode until then for most traders.
I think so. Let's do a quick peek in on discretionary here.
Yeah, I'd also, after this, I'd also like to look at healthcare too, Kevin, because that's one that's been significant. But let's look at discretionary here.
No, I'm going to look at healthcare because I've been talking about healthcare for months, seemingly. But I was wanting to do discretionary because I wanted to also look at home builders hereafter. So the reminder that I think a lot of traders, like even myself, will struggle with, even I will struggle with, is that not just 50-day here. There was some action below the 50 that would have given traders plenty of reason to believe that you had a little bit more of a pause going on in here. But that all changed in the last 3 days, didn't it? I mean, we got right back above both of those important moving averages.
It sure did. So nice little breakout above the 20-day and the 50-day. So there's your moving average, your moving average breaking two significant moving averages. And, it may not, depending on what happens over the next few days, wouldn't surprise me to see that cross. I said 20-day. That's a 10-day moving average, I guess.
Oh, is it? Hang on, let me fix that. That should not be what's going on here. I may have, let me see. Yep, you're right. I'll change that real quick. So make that what it should be, 20, 50, 200. There we go, everybody.
Yeah. Yeah. So, but we still have crossed back above it, regardless. Mm-hmm. And so that's a strong, that's a lot of traders will consider that a strong signal. If you're viewing this as kind of a big flag pattern, well, when we talked about waiting for some sort of confirmation, there's the break that some traders will use. Now that I don't know, if this is going to continue up or not, but we did break above that upper line.
We did. Now, like I said, I wanted to kind of peer in a little deeper into the discretionary space. So that's why I brought in discretionary, was to look at home builders, because the pattern here seems to be notable, Brent. We talked about this actually before I left, because we had the makeup of a potential head and shoulders, and then we closed below it. Well, now, Brent, we've rallied back into what was the neckline. This is one of those scenarios where we actually have seen a head and shoulder pattern. We can call it that now, can't we?
Absolutely. And just a reminder, when we talk about patterns, cup and handle, head and shoulders, double top, whatever, really, when you break it down, it comes down to support and resistance levels. That's a support level that we broke, and it gives us implications about potential targets on the downside in terms of reversal. But at this point that we broke below that as a support level, it's now a resistance level. We'll have to see. That's a significant impediment to going forward here. It can certainly break up, but right now that's kind of how I view it, which is coincident with the 20-day moving average essentially as well.
Yeah, right there. Boy, that is a very uncomfortable spot for the bullish investor trader of home building, home construction, generally speaking. Like we say, you have this line of support, the neckline. We should also just give traders an estimation, nothing more than that. Remember, we love to provide where we can, education every step, right? Well, let's talk quickly about what could this pattern look like if it meets its measured move target. We would calculate that from taking the head to the neckline. Okay, so I'm just going to try and clean this up, make this a nice 90-degree line, and then I'm just going to activate it and move that from the neckline down, and that's going to give us an approximate target. Happens to coincide with the last real low down here, Brent, in the space, so right around 2100 or so. Move would be about a 12% breakdown. So, Brent, if a trader, again, educational purposes only and example only, if a trader were bearish on the space, they would know quickly if they were wrong. They would likely consider covering any trade through this on the downside if it rallied back up and made a short-term higher high, perhaps if it took out this gap ledge. That's kind of a process that a trader for a negative or a bearish opportunity may very well consider.
Yeah, so that's you're bringing up the subject of money management, reward to risk, and when those are all, there's a lot of little things in money management, different facets of it, including reward to risk, including putting your stops. Stops don't guarantee you getting out at a particular place, but it can help in the money management aspect of things. Entering, when to enter, when to take profits. These are all questions that come up, but when you're doing the initial trade setup, you don't know what the stock's going to do. You don't control that, but you do control the initial conditions. Is it meeting your general rules for the setup? Are you setting up with a positive reward to risk ratio, even though that may not come to fruition along the way? Those are the things that you can control.
So true, Brent. And this is exactly why you get from me so many points on a day-to-day basis, highlighting the need to have a plan and manage our emotions and put ourselves in proper positions and not overinvest, even though we might like a setup better than another. You know what? Inevitably for traders, what I think a lot of people realize is the moment that they overdo their limits, overdo their comfort, is when things tend to move against us. That's just the nature of the beast, it would seem. So, okay, Brent, let's talk about those stocks in the news. I know everybody's dying to get to them. Let's hit up Netflix. We're going to start right there because the move in Netflix has been substantial. Now, the news on Netflix, so we're off pretty healthy today, about 9%, 113 points, pulling back to the 200-day moving average below us there. 200-day resides at around 1113 on Netflix. So now the thing here was that Netflix's missed earnings based on their tax dispute with Brazil specifically. So it's a miss, but many investors and traders are wondering, is that really a reason for selling down the stock as much as they have? And it might very well be opportunity here for some traders as we near the 200-day moving average. So Piper Sandler adjusted their Netflix price target down from 1,500 to 1,400. They maintained the overweight rating on shares. And then also we had JP Morgan making an adjustment down to 1,275 from 1,300. Both of those seem notable here, Brent. So, and I just realized I made a skip I totally teed it up and I made a skip of healthcare. We're going to come back to healthcare, Brent.
We'll get healthcare in a minute.
Here. Yeah.
Big gap down. But big gap down on healthcare. We're busting below some of those lows, which I'd probably consider support ahead of time there. We'll see if that 200-day acts as a support here. And, watch it intraday and we'll see if it recovers. See if we can hold the low for the day or if it just keeps going lower. That'll be a good sign for us there.
Okay. There was also a comment out of Evercore, by the way, that due to a rare and modest revenue miss, the sloppy operating income results were due to the Brazil expense issue. So Evercore states that while they missed guidance for the first time in 2 years, the company's massive subscription model doesn't lend itself to major variance one way or another, thinking perhaps that this sell down may be a little bit overdone. But, as traders, we won't know how that's going to be until we see how some of this price action levels out. Now, again, I apologize, everybody. I am just getting back into the swing of things. So we're going to look at healthcare.
Yeah, let me address a question here in the
Please.
chat while you're switching over to healthcare.
Of course.
There's some question on the market maker move, Kev.
Okay.
And when does it show up on charts and when does it not show up on charts? Market maker move is going to show up on charts when the front dated volatility is higher than subsequent dated volatilities. It will not show up, not on charts, on the trade tab, if you go to the trade tab.
Gotcha.
So like if you go to just pull up Google or Alphabet on the trade tab, and you're going to see there's no market maker move showing up there because the front volatility is lower than the subsequent in the next dated volatility. The 42% is lower than the 61%. But if you check out, say, something else, most other stocks right now, probably to be honest, like Tesla or something, what you're going to see is, I think it is, because I think I saw somebody saying it was up. You'll see, and you look at those volatility numbers, you see how that front month volatility, the 114, is higher than the subsequent volatility? That's when market maker move numbers show up there. So I know it's a tangent, sorry everybody, but it was in the chat, and I figure it's a question that probably a lot of people have going forward on that market maker move. Now, after our little brief foray into market maker move, we can go to healthcare there.
Healthcare it is. Let's take a peek at healthcare, everybody. And again, apologies for being a little off my game. Look at that move, Brent. We had talked. You're right. Look, I've been pointing out. You can see my rectangles, my ovals on this chart. We've been talking about these levels and what they potentially might hold for us. I think, Brent, the biggest thing that stands out to me right now is that we've broken a bull flag to the upside here. And that bears watching with the rising 20-day moving average.
Yep, absolutely. I think that's a perfect pattern. That's one reason I wanted to look at it, because I know you've brought our attention to this lately before your venture off into the woods there. But while you were gone, we had the flag breakout, and I thought you'd find that interesting there. So a lot of strength in terms of late, I don't know, maybe the strongest sector of late there, the last few days at least there. So interesting move. That's a bullish development in the healthcare sector. It
is. A quick hit on the longer range chart gives you the heads up that maybe there's an opportunity for a continuation move. I'll remind you all that there are individual groups within healthcare that have been leading, and they've largely been biotech. I'm going to put that up here, the index, and look at the breakout there, Brent. Not just a bull flag breakout, but a move to new highs in the shorter run there. So I find this interesting because biotech is one of those risk-on groups.
Yes.
The interesting thing is we've had a new risk-on group developed in the last 2 to 3 years, that being AI, and it seems like maybe biotech kind of lost its luster to a certain extent, but as AI has started to breathe in the last week plus, you've seen a break in some of this biotech. So maybe risk-on remaining in the market, just not necessarily tied to AI exclusively.
Yeah, and just keep in mind, biotech is kind of one of those notorious sectors in terms of volatility there. It can change. Now, the index as a whole moderates the volatility a little bit as compared to individual stocks for the most part, but it does tend to move a lot quickly, and that's what we're seeing. It's going, it's rocketing up now. Your July highs potential resistance there, I would say, up there in terms of July highs.
Yeah, pretty interesting and notable development there from a space that traditionally we think of as a little bit more kind of defensive in nature, but I thought it was notable that the biotech has been really pushing there. Okay, Brent, let's see. There are some stocks in the news today on upgrades. I thought we could look at Halliburton here. Halliburton was upgraded by both RBC and HSBC. So let's pull that up. Halliburton's chart is another one that might have started turning a corner.
Yeah, I mean, you get a nice little bump with earnings. Certainly helped on that. We had a nice gap up, but gap up today again, up another 3% today. Now, yesterday's candle was just, undeniably bullish, I think. Today's candle gap up, so I'm not going to say it's not bullish in that sense, but we're starting to show some a little more equilibrium in terms of buyers and sellers, supply and demand there on that candle here. And so it'll be interesting to see the rest of the day. We got a bunch of well, we got a long ways to go in the day, so we'll see how it ends up today. But as of right now, it's giving, I want to call it a doji, more spinning top-ish type pattern, showing a little bit more indecision, like maybe it's made the most of its move here at this point.
Perhaps. I should point out that both RBC and HSBC upped their price targets as well, respectively. RBC to 31 from 26, HSBC to 30 from 23. Neither of those targets are guarantees to be achieved, of course. We all know that. And inevitably, I'm going to remind you, we got to peel back that curtain. We're going to look at the longer range here. First, before I do it, the first thing as a trader that jumped off the screen to me, Brent, was, yes, new high, but the severe downslope to the blue 200-day moving average tells me that we're making a significant move in the stock, in the sense that it was likely in a strong downtrend and might be changing. If that's in fact the case, still got a lot of work to do, as you can see, Brent, from where we have seen Halliburton historically. I like to call out the fact that we broke the long-range uptrend and then got into a longer-term downtrend. That's what happens with trends. I think it's important to remind ourselves there, Brent. But if this continues, does 29 maybe call out a level where a pause might come to play here for some bulls?
Yeah, I mean, getting back up to where it was a year ago or whatever, that's probably it's likely a longer term process but it builds off smaller ones. So right now we just got to continue to hold that short term. When I say short term, last 2-3 months or whatever, the higher lows that we've had on that. And that's kind of the key that we want to see right now. So resistance up at our moving average. Yep, likely. And that's where we hit some lows before too. So certainly some other reasons to consider some resistance there as well.
Yeah, plenty of reason. And yet the reminder likely is that you've got a chart that is maybe shifting its scenario a little bit, right? Having moved to new highs in the shorter run, held short-term lows, so on and so forth. Those are things that are giving new traders or investors a little more comfort at these levels, no?
Yeah, I mean, any chart where you're looking, maybe not any, but most charts, you'll see there's going to be impediments along the way, resistance levels along the way that we're going to hit. So one step at a time. Right now, it does seem like we may be in this trend change time.
Could very well be the case. So, Brent, there's let's see here. I think I had one more that was in the news this morning, but we are right about at time, and it was one that for many traders is Apple, keeping an eye on what it's up to here. With the stock moving to once again highs. It's hard to believe, but Apple at all-time highs up there. I could probably clear this chart up a bit. The headline news there. Apparently, they've had some development hurdles with their the iPad with a foldable screen that was hoped to be released in 2028. So that hit the wire here. They made a note also about manufacturing of the Vision Pro in Vietnam in lieu of China. That probably stands out a little bit. But anything else that you're monitoring, keeping a close eye on here?
Just one other
in
comment
Apple?
on Apple. Their
Please.
iPhone, what number are they on now? 17? Sales have
17
been
is the
pretty
newest, I
strong
believe.
here,
Yeah.
is one thing that's helping out the company, I think, in that in this case there. But I know we're at time there, Kevin. Hey, we're glad
Yeah.
to have you back in civilization here, Kev.
It's good to be back. I appreciate all of your understanding with my missteps and fumbles here today, but I'll be better in the future, I promise.
No, you're
Always
great.
a pleasure to be on with you, Brent. Thanks for being here, sharing insights and thoughts. A big thanks to Barb in the chat as well. Don't forget to follow the three of us on X, please. Brent Morris, CS, Kevin Horner, CS, and Barb Armstrong, CS. If you like the discussion, a thumbs up down below will help us out as we'll get this reviewed and into the archive for you all a little later today. Make sure you're subscribed to the channel. And I think I saw Barb teeing us up for our next class, which is trading growth and value stocks with our man James Boyd. So as always, keep it tuned right here to the channel, everybody. Hope you all have a fantastic Wednesday. Look forward to catching up with you again real soon.